Assalamualaikum and a very good day. My name is Nur Afifah Alia binti Dismani, metric number at 23A1698. Today I'll be presenting a comparative financial and variance analysis of two publicly listed companies in Malaysia, food beverage sector, Kawan Food Berhad and also FNN Holding Berhad. As the business environment become more competitive and dynamic, financial performance analysis has become essential for stakeholders, including investors, managers, and policymakers. It provides insight not just into profitability but also into operational efficiency, cost structure, and also long-term sustainability. In this study, we selected two companies from the same industry but with very different business models and scales of operation. Kawan Food Berhad is a specialized manufacturer of food frozen Asian product. Although smaller in size, it has a strong export presence and is known for automation and cost efficiency. For FNN Holding Berhad, on the other hand, is one of Malaysia's oldest and most diversified F&B giants, known for household brands like 100 Plus and Magnolia, with operation across Southeast Asia. The purpose of this report is to analyze key financial indicators from their most recent financial year, especially revenue, net profit, cost of goods sold, and operating expenses, and to identify the reason behind the differences. These factors include internal aspects such as company strategy and structure, as well as external influences like consumer trends and also academic conditions. That's all from me. Thank you.
Kawan Food Berhad began as a small family business in 1960s and evolved into a global frozen food exporter. Known for its paratha and chapati production automotive, it now sells over 200 products in more than 40 countries. Its modern facility in Pulau Indah Highland is innovative and sustainability effort. Fraser and Nerve Holding Berhad, or FNN, has a history dating back to 1883. The Malaysian subsidiary, established in 1996, managed well-known brands like Entreplus and Tipo. With export to over 90 countries and strong ACH performance, FNN showed reliance, innovative, and strategic growth through acquisitions like Sri Nova and Cocoland.
Assalamualaikum, my name is Lailatul Wazifa binti Ahmad. My metric number is A23A203. Now I will explain the methodology used in our variance analysis between FNN and Kawan Food Berhad. We start by collecting financial data from reliable sources such as the company's annual report for the past 3 years. These reports were taken from official company website and Bursa Malaysia, and we cross-check the figures using financial platform like Bloomberg, Morningstar, and Reuters to ensure accuracy. Next, all the financial data were organized in Excel and Google Sheet. We focus on key financial elements like revenue, cost of goods sold, gross profit, operating expenses, and net income. Variance analysis was done in two ways, comparing the two companies with each other and analyzing the year-to-year change within each company. We calculate both absolute and percentage difference. To support this, we also use ratio analysis such as gross profit margin, operating margin, net profit margin, ROE, and return on asset to better understanding performance and efficiency. Besides numbers, we also look at qualitative factor. Internally, we consider management strategy, cost control, and operating efficiency. Externally, we consider the company industry condition, competition, and government policy that may affect financial performance. To strengthen our study, we refer to academic literature. For example, Pandey see variance analysis as an important strategic tool. Eli Momo explained how it helps in decision making, and Arwa Moge highlight its use in cost control. Lastly, we use visuals like tables, bar charts, and trend lines to clear present the variance and make the data more understandable. Okay. In conclusion, this methodology combines both number and real-world context to provide a balanced analysis and practical recommendation for both companies. That's all from me. Thank you.
Hi, my name is Loshin Suryakumar. My metric number is A23A2431. So now I'll be presenting about variance analysis for Kawan Food Berhad in the shortest form. So now, first, let's look at the statement Okay, so now I'll be explaining about it one by one. So basically, in 2022, revenue increased by 41.46 million or 16.47 percentage, and this showing strong sales growth compared to 2021. Next, cost of goods sold also rose by 30.45 million due to increased production, but this is acceptable as it supported high revenue. Next, the gross profit improved by 12.16 percentage, meaning the company managed its margins well. So next is operating expenses. It increased by 11.66 million, which reflects business expansion. Despite the higher cost, net income rose by 6.69 million or 21.06 percentage. So basically this is showing an overall positive performance. So now let's go through the next variance analysis, which is 2023 versus 2022. So basically in 2023, revenue growth slowed to 4.53 percentage with an increase of 12.45 million. So cost of goods sold dropped slightly by 861,000. So which might suggest reduced production, marked as unfavorable. However, gross profit increased by 16.03 percentage, showing strong margin management. So the next one is the operating expenses, which dropped by 10.1 million and which could reflect cost cutting and not always a good sign in a long term. So unfortunately, net income fell by 21.70 percentage or 8.35 million, which is a major concern for profitability. So lastly, let's go through the final slide for Kawan Food Berhad, which is 2024 versus 2023 variance analysis. So in 2024, revenue rose by 10.56 percentage or 30.33 million, showing a very good recovery. Cost of goods sold increased by 14.96 million, but at a slower rate than revenue. Basically, it's showing a positive sign. Next, the gross profit jumped by 18.73 percentage, indicating a strong control over cost. Operating expenses remained stable, with a minor decrease of 63,000. So, most importantly, net income improved by 1.29 million or 4.28 percentage, showing a return to profitability after a tough 2023. So, these are the explanations for Kawan Food Berhad's variance analysis from me. Thank you.
Assalamualaikum, Doctor. My name is Nur Azabatusha binti Malik and my metric number is A23B1330. I will be presenting to you the variance analysis of Fraser Folding Berhad or FNN. And we'll begin with a comparison of Fraser Folding Berhad group performance between 2022 and 2021. The revenue grew by 339.3 million and it increased by 8.2 and indicating a favorable trend, and this is reflect solid sales growth and improved market presence. However, COGS increased even more by 359.4 million or 12.2%, and this suggests rising input costs possible due to raw material inflation or supply chain pressure. As a result, gross profit declined slightly by 20.1 million at 1.7% drop, and this marked an unfavorable variance, showing that cost increase outpaced revenue gains. And for the operating expenses remain largely stable, increasing by only 4.3 million or 0.6%, which is still seen as favorable in terms of cost control. And last but not least, the net income decreased by 12.8 million and down to 3.2%, pointing to a negative impact on profitability despite the revenue growth. So in summary, while top line growth was achieved, rising COGS eroded profitability margin, resulting in a slightly weaker bottom line. Next is the variance analysis of the 2023 and the 2022. The revenue increased significantly by 531.2 million and a solid gain of 11.9, reflecting continued business expansion and market demand. However, this was accompanied by a sharp increase in COGS of 691.4 million or 21%, which is a faster rate than revenue, and this suggests higher production and distribution costs, putting pressure on margins. Consequently, gross profit fell by 160.2 million and a decline of 13.6%, indicating unfavorable variance. Profitability at the gross level weakened considerably. Interestingly, operating expenses dropped drastically by 355.2 million or 48.9%. Although this may appear favorable at first glance, it warrants further investigation. It could indicate cost cutting, restructuring, or accounting changes that need clarification. Despite the drop in gross profit, net income surged by 159.7 million up to 41.8%, which is highly favorable. This improvement was mainly driven by reduced operating costs and perhaps non-operating gains. Overall, the business managed to deliver higher net profit, but the erosion in gross margin and the large drop in expenses signal a need to assess the quality and sustainability of its performance. And lastly is the variance analysis performance from 2023 to 2024. The revenue rise by 244.2 million, representing a 4.88% increase, which shows continued top-line growth, although at a slower pace than the previous year. COGS also increased by 168.2 million with 4.22%, slightly below the revenue growth rate, which is a positive indicator for maintaining margins. As a result, gross profit improved by 76 million or up to 7.49%, which is favorable and suggests improved cost management or a better product mix. Operating expenses increased modestly by 9.4 million or 2.53%, which remains within a manageable range and reflect cost discipline. Net income was raised slightly by 2.3 million of 0.42% increase. While this is a still favorable variance, the minimal growth indicates the bottom line gains may be leveling off. So in summary, 2024 reflects stable performance with positive trends across most metrics. The company has managed to protect its margin and keep costs in check, but future growth may depend more on innovation and efficiency than volume increase. That's all from me. Thank you.
Kesha Vartini Anak Prince Freedom, and my metric number is 823825456. Now, let's just focus on the key performance variances from 2021 to 2024 and their connection to the company's financial ratios in 2024. So, in 2022, Cowan Foods revenue rises by 16.47 percentages, which is driven by the strong global demand. However, the cost of goods sold increased even more by 18.89% due to her higher input costs. In addition, the gross profit still improved by 12.16%, but the operating expenses also jumped. Despite that, the net income grew by 21.06% due to a solid operation and tax savings. In the year 2023, the revenue growth slowed to 4.53% as export fell, and especially in North America. Cost of goods sold also dropped slightly, boosting the gross profit by 16.03%. Strong cost control led to a 13.89% cut in operating expenses. Still, the net income fell to 21.70% due to a lower revenue growth and fewer one-off gains. Let's focus on the year 2024. In 2024, there is a strong sales growth with revenue up to 10.56%. The cost of goods sold rises by 7.30%, but the gross profit soared to 18.73% with operating expenses stable. Net income increased by 4.28%. These gains directly improved a key ratio like gross profit margin, return on equity, return on asset, and inventory turnover. Finally, Cowan Foods' financial journey shows a rising efficiency, cost control, and a stronger profitability by 2024. Thank you.
Hi, my name is Viviana Aurelanchan and my matrix number is A23A2334. Let's take a look at the FNN financial performance for the year of 2022 compared to 2021. Revenue grew by 8.2%, driven by the both product mix and stronger export demand. However, this positive momentum was offset by a 12.2% rise in cost of goods sold, mainly due to the increase in raw material costs, logistic expenses, and adverse currency movement. As the result, gross profit declined by 1.7%, reflecting the margin pressure the company faced despite the higher sales figure. For the operating expenses, shows only a modest 0.6% increase, which suggests that the company effectively managed its overhead despite the inflation and the cost of associated with the rebranding effort. Unfortunately, net income dropped by 3.2%, showing that rising costs ultimately weighed down the profitability. Overall, while the company shows strong top-line performance, 2022 highlight the challenges of maintaining margin in the high-cost environment. Next, let's take a look for the year of 2023 and 2022. In the year 2023, FNN demonstrated a strong recovery with an 11.9% increase in revenue, driven by the solid performance in both domestic and export market, as well as the continuous innovation in the product offerings. However, COGS rose significantly by 21% due to the escalating costs in raw material and packaging. This caused for the gross profit to be declined by 13.6%, indicating ongoing market pressure despite the top line growth. On the positive note, FNN achieved a remarkable 48.9% reduction in the operating expenses thanks to the strategic cost control initiative and improved operational efficiency. As the result, net income increased sharply by 41.8%, showing that the company effort to improve cost structure paid off. Overall, on 2023 market a turning point in profitability as FNN successfully navigate cost challenges through effective management and operational discipline. Next is for the year of 2024 and 2023. During the year of 2024, FNNs continue a upward trajectory with 4.88% increase in revenue, supported by the consistent growth in the both Malaysian and Thai food and beverage segment. COGS rose by 4.22%, reflecting the continued inflationary pressure, particularly in logistic and raw material. Despite this, the gross profit improved by 7.49%, showing that the company has improved its cost efficiently and achieved a better sales volume. Operating expenses rose slightly by 2.53%, mainly due to the higher distribution and employee-related costs. However, this modest increase did not significantly affect the bottom line. As the result, net income recorded a marginal increase of 0.42%, reflecting a steady, resilient performance in cost-sensitive environment. In summary, during the year of 2024 demonstrate that the FNN operational strength and ability to maintain profitability under ongoing economic challenges.
Assalamualaikum and a very good day. My name is Nur Afifa Alia binti Gismani, metric number 823A1698. For the conclusion and recommendations, our analysis has revealed key contracts between the two companies. FNN Holding benefits from its wide portfolio and regional brand strength, but this also comes with high operating costs and logistical complexity. To maintain its profitability, FNN must continue to optimize its cost structure, invest in trending product segments like health drink and dairy alternative, and strengthen its digital and direct to the consumer channels. For Kawan Food Berhad, although smaller, show consistent profitability thanks to its focused operations, export-oriented business model, and efficiency in automation. The company can further grow by entering new market, diversifying into plant-based fruit frozen, and enhancing its branding effort both locally and also online. Overall, this comparison highlight how different business strategy impact financial outcome even within the same industry. Financial and variance analysis like this doesn't just describe what is happening in the business, but it helps company to see where they stand, where they can improve, and how to plan to sustainable growth and also competitive market. That's all from me. Thank you.